All right, welcome back everyone. We are moving on past the idea of demand and the law of demand, and we're going to learn about the second part of the equation, which is supply. So after we finish up thinking about supply, we will be able to put demand and supply on the same diagram. Okay? But you'll notice about our supply curve is that it is upward sloping. So maybe we need to define what supply is first, okay? So demand is simply the amount of a good or a service that a consumer or a group of consumers are both willing to buy, as in they have the preference for it, and they are able to buy, as in they have the money to buy it, right? So supply is simply the amount of a good or a service that a producer is willing to make, as in they think they can make profits from making it, right? And that they are able to make in that they possess the factors of production that are necessary to make that thing. So that's supply. Our supply curve has an upward sloping curve, right? So the law of demand said that as prices decrease, quantity demanded increases. All right, so the law of supply is the opposite of that. As the price increases, the quantity supplied increases, right? And we know that to be true for a couple reasons. So first of all, we have one of the things that we talked about in our Introduction to Economics unit, the law of diminishing marginal returns. So that idea kind of says that when a small operation, like a taco truck, right? This is a market I think we can all identify with, the market for tacos. If there's just sort of a locally owned operation and they only maybe have one truck, if they add an additional truck and have 2 taco trucks to their operation, then they're going to expand their production by 100%, right? But if we think about a very large business like Amazon, right? If Amazon adds an additional truck, their increase in output from adding that truck will be a lot smaller than our family-run company with only 2 taco trucks, right? So as more and more factors of production are added, for each additional factor of production added, the increase in output gets smaller and smaller and smaller, right? So that's the law of diminishing marginal returns. So with that idea in mind, producers need to charge higher prices, or they're incentivized to produce more at higher prices when we consider that the larger a business gets, the smaller the increase in output will be. Okay? So the other idea is increasing marginal costs, right? If we think about Amazon as a business, they already have a pretty big operation. They have a lot of fixed costs, right? They have a lot of costs that will not change regardless of how much they make. But if they want to make more, then that's going to increase their costs, okay? So that's the idea of increasing marginal costs. As a business makes more, it will cost them more to make that thing. That is why we have an upward sloping supply curve, and that is why, as prices increase, producers are incentivized to make more. Okay, so I'm going to work that out for you and show you how that's done. Okay, if you watched our video on demand, this will look very similar to that. Okay, so as prices go up, quantity supplied increases. Okay, which isn't to say that supply has changed, right? We're still starting with this same question that we did when we watched that demand video, right? Has there been a simple price change? That's the question you should ask yourself whenever you start with any question, okay? In this case, yes, there has been a price change for tacos, in which case producers will be incentivized to make more tacos, right? Businesses want to sell things that have a higher price. And the reason for that is, it's simple, they can just make more revenue that way, right? They can cover their diminishing marginal returns, and they can cover their increasing marginal cost. Just going to put some arrows on there to show a shift, right? And the opposite reasoning, again, is also true. As prices decrease, we will see producers produce less of that thing, okay? So we can draw that pretty simply, right? Price of 3, quantity of 3 decreases from Q1, okay? And again, arrows to show a shift are always useful, right? So this diagram shows a change in quantity supplied. There's been a price change, so our supply curve has not moved, all right? Now, let's say we ask ourselves this question: has there been a price change? And we come to the conclusion that yes, there has been a price change. Then we know the supply curve itself is going to move, right? So here again we get into the determinants of supply, as in what could, besides price, what could cause a business or a group of businesses to make more or make less, right? And probably the most frequent or most common determinant is the cost of production, right? The cost of the factors of production, rather, right? Land, labor, capital, and management, right? Probably the biggest cost for just about any business is going to be labor, right? So let's say there was an increase in the minimum wage, which some governments and some political parties are talking about doing. Then we would see the supply curve decrease, because we know that businesses only have so much revenue and they only have so much money to spend on factors of production. If they pay their workers more, that means they'll have to cut costs in other areas, and they will have to supply less. Okay? So let's maybe just show that. So if we've decided from one of our determinants that there's been a decrease in supply, just like we did on our demand curve, we're going to show a leftward shift of the supply curve. Again, we're going to assume that price stays right where it is. When we put supply and demand on the same graph, that will obviously change, but if you only have a supply curve on your graph or only a demand curve, we're going to keep price right where it is, right? So that is how we show a decrease of supply. Okay? So that's the biggest determinant, is the cost of factors of production. If the costs go up, supply decreases. If their costs go down, businesses will be able to make more, right? So let's maybe work that out. So to show an increase of supply, same deal, right? An increase, shown in green here, just simply means that the supply curve has shifted to the right. And in this case, we're going to connect that price of 1 over to supply 3, and we show a shift to the right to show an increase of supply. Okay? So real quickly here, just to talk you through some of our other determinants. Joint supply is another determinant, along with competitive supply. We're going to call those things related products. Right? So joint supply simply means when two things have, two goods or two services have reasonably similar inputs or factors of production to the point where they can be made at the same time. Right? So a good example of that might be like milk and cheese. Right? Often dairy producers can make those things at the same time. Okay? So if the price of cheese goes up, then dairy producers will want to make more cheese, which means they could probably also make more milk fairly easily. Okay? So competitive supply, you might also see this as producer substitutes. That just simply means that those two things are in competition with one another. So if you're thinking about like a Mexican restaurant that makes tacos, right? They can probably, with reasonably the same ingredients, they can probably make a taco or a burrito. So in this case, burritos and tacos would be in competitive supply. So if the price of tacos went up, taco producers would want to make more tacos, but then we would see the supply curve of burritos decrease because those things are in competitive supply. Okay, our third determinant here, different forms of government intervention. So an indirect tax, you might see that as called a sales tax, or GST, or VAT, or something like that, okay? Those are all consumption-based taxes. But they shift the supply curve. They shift the supply curve because producers are the ones who pay the taxes first, right? When you go to the store and you buy a product, you're probably paying for a sales tax as well for most things, right? So think about what happens there. You pay the business when you buy that thing, right? But then that business pays the tax on your behalf. So it's really the producer who's the one paying the tax directly to government. So that's why the supply curve decreases. Okay? So indirect tax is going to decrease supply. If a government announced a relaxation or a lowering of an indirect tax, or they just got rid of it altogether, we would see the supply curve actually increase. Okay, the other one here is a subsidy. Subsidies are payments from the government, and they go directly to the producer. So that's basically an additional form of revenue for that producer beyond selling that good or that service to the consumer. So with additional revenue, businesses will be able to make more stuff, right? We're seeing a lot of subsidies right now in the clean energy field. Right? Governments want to get our societies off of using fossil fuels as a form of energy, so they're trying to incentivize producers to make cleaner forms of energy. Okay? So subsidies increase supply, and by the same reasoning, if a government announces the end of a subsidy, then we would see our supply curve for that product decrease. Future price expectations, right? The key word there is expectations. If producers expect that they can sell a product for a higher price later on, they will try to anticipate that and make more of that thing now and try to get ahead of the game a little bit. So if producers of tacos thought that they could sell tacos at a higher price later on, they would increase their supply, whether or not that price change ever actually happens, because again, their expectation is that that price will go up, right? And they will make more in anticipation of that, right? The opposite reasoning, again, is also true. If a producer has a good or a service in their portfolio of things that they currently make, and they know that the price for that thing is going to go down, they're going to make less of it, again, because of the law of supply, right? So if that's the case, you would see our supply curve shift to the left. The fifth one here is technology. That's kind of listed as a separate determinant. Now, capital is basically technology, but it's sort of listed separately. Same idea, though. Okay. And the last one here, the number of firms in a market, right? So here we're thinking about the idea of market supply, right? So several producers of tacos at once, not just one Mexican restaurant, right? So there are some markets where there are a lot of barriers to entry. There are really high costs to starting up. So a good example of that would be like telecommunications. If you want to buy a cell phone plan in the United States, you only can go through so many producers because it's actually very expensive to start a company, right? You have Verizon, you have AT&T, and a few smaller companies besides that, right? There's a lot of technology involved. You need a lot of cash to start that business. So that's why we're probably not going to see the supply of telecommunications changing because of a change in the number of firms, right? But now the market for tacos, or even the market for food and restaurants and things like that, there's very low barriers to entry there. Any one of us could go start our own restaurant, and really there'd be a few startup costs, renting out a new place, getting a license from the state to begin serving food and beverage, right? But that's not a very high barrier to meet, right? So if a whole bunch of new restaurants opened up and they served tacos on their menu, we would see our supply curve increase like we have shown in green, right? So to wrap this one up, again, ask yourself, has there been a price change? If there has been a price change, your graph will have one of these two outcomes shown here. If the answer to that question is no, there has not been a price change, you know that you're either going to increase the supply curve or decrease the supply curve, assuming that your price is not changing. All right? Thanks, guys.